Hey, welcome to the weekly market recap. So I just started this, but I think it's going to be a great addition just for you guys to know what's going on with the marketplace, the economy, and what to expect with the weeks to come. So we're going to recap last week, and then we're going to give a forecast for this coming week. All right. Okay, so let's start off with a recap of last week's performance in the marketplace before we talk about anything else. All right. So starting with the major indices, the S&P 500, which tracks the 500 largest U.S. companies, stayed mostly steady. Okay, it only dropped around 0.1%. The Dow Jones Industrial Average, which focuses on the 30 of the biggest U.S. corporations, dipped a bit more, around 0.6%, while the Nasdaq Composite, which is packed with tech companies, okay, they saw a 0.6% rise, which is great. Now, this uptick has helped, and it was helped by strong earnings from a few big tech names. The movements show how different parts of the market react uniquely. While some sectors struggle, others, they shined. Now let's take a look at the top sectors that stood out. So energy stocks, they had a solid week with oil prices ticking up. This gave companies that produce or supply energy a boost. Of course, I love a rise in oil prices. As an investor, not as a consumer, as an investor, I absolutely adore it. So it's good to see that the rise in oil prices have led to higher energy stock values as companies in this sector benefit directly from increased demand. Now, on the flip side, technology stocks had a more challenging week. Higher bond yields, meaning higher interest rates, tend to take borrowing more expensive, which can slow down growth in the tech industry. Now, we also saw regulatory pressure come into play, causing some investor caution in tech-heavy portfolios. All right, so now let's talk about some notable companies, some high-profile companies that made the headlines last week. Of course, we're going to talk about Apple. All right, so despite releasing their quarterly earnings, Apple stock saw a slight decline. Investors appear to be cautious due to a dip in iPhone sales, which that's to be expected. I mean, if we've been looking at Apple's performance, are you really surprised? Okay, especially in certain international markets where competition is rising. Apple's forecast also hinted at potential slowdowns in consumer demand, which may have raised concerns about their future growth. Now, moving on to Tesla. Tesla stock also dipped as the company dealt with production issues. Specifically, there were challenges in meeting demand for its newer models due to supply chain constraints, especially in European markets. And as it relates to Tesla, the production bottlenecks, can delay delivery timelines, ultimately affecting Tesla's quarterly profits and causing investor hesitation. Lastly, we need to talk about Amazon. So Amazon actually had a strong week. Amazon stock surged after an impressive earnings report that exceeded Wall Street's expectations, with strong revenue from both its e-commerce and cloud service segments. Now, Amazon's numbers reassured investors that the company is effectively navigating a tough retail environment, which positive earnings can boost investor confidence, suggesting that Amazon is not only stable but continuing to grow. And with an evaluation like they have, it's almost a no-brainer, right? We should definitely be investing into Amazon. Which brings us right into major economic events and indicators that you should be looking out for. So last week, the government released new job data, which showed only 12,000 new jobs were added in October. This is a big slowdown from September's 223,000 new jobs. Ooh, that is a big difference, guys. Factors like hurricanes and factory strikes were largely responsible, as natural disasters and labor disruptions typically reduce job growth. Now, despite slower job creation, the unemployment rate held steady at 4.1%, which is relatively low. A stable unemployment rate can signal that the labor market is still strong, even if hiring has slowed down. However, if this slowdown does continue, we may see impacts in consumer spending and business growth, which are two huge factors in market health. And to add to that, we also got an update from the Federal Reserve. Fed officials hinted at potential changes to interest rates, which can affect everything from mortgages to credit card interest rates, as well as borrowing for businesses. Investors are watching closely to see if the Fed will cut rates to stimulate the economy or keep them steady to prevent inflation. We do know that there was a recent Fed cut, which, made people excited, especially businesses, the borrowing being able to increase. So we'll keep an eye on this. All right. Now, next we have global events impacting the market. All right. So in Europe, energy stocks boosted the market on Friday, but overall, Europe saw its biggest weekly drop in 2 months. This dip reflects broader concerns about economic stability and when Europe's market struggles. It can sometimes impact the U.S. investors due to the interconnectedness between the two of them. Also, it's important to note that geopolitical events like trade tensions and political changes have made investors more cautious. These events can create uncertainty and influence sectors sensitive to international trade like manufacturing and technology. Now let's go into the key themes or trends, okay? 2 major trends are emerging right now, a focus on renewable energy and steady interest in technology and healthcare. Now, renewable energy is attracting attention as companies shift to sustainable sources and oil prices remain high. Meanwhile, technology and healthcare stocks tend to perform well even in uncertain times as they offer products and services that people rely on consistently. All right. When in doubt, stick the consistent route. All right. These themes suggest where long-term opportunities might lie for investors looking to tap into steady growing sectors. Take notes. Now that we talked about last week, let's talk about what's coming up this week and do a forecast. All right. So looking ahead, here's what we're watching for this coming week. First, the U.S. non-farm payrolls report is coming. Okay, keep an eye out for that. This report is going to show how many jobs are created across industries each month, offering insights into economic health. Now, if this report shows job growth picking up, it could boost investor confidence. However, if growth remains slow, we might see market caution carry over. So we're also going to watch for any news around the Federal Reserve on interest rates as they signal a rate cut. It could mean more affordable borrowing, which can benefit sectors like housing and tech. However, if they keep rates steady, it might suggest that the Fed is focused on controlling inflation more than boosting growth itself. Okay, so finally, all right, several big companies are set to release earnings this week. These reports will give us a sense of how corporations are managing in the current economic environment and can impact sector performance, all right? So here's some key takeaways for you guys this week, right? Number 1, interest rates updates. Keep an eye out on any news from the Federal Reserve. Changes here can influence everything from mortgages to credit card rates, all right? Number 2, sector performances, especially in tech and energy, which are seeing different pressures and growth potentials right now. And number 3, earnings reports. Major companies' earnings can shift market sentiment and provide clues about economic resilience. So remember, markets can move quickly, okay? But sticking to your long-term goals and staying informed helps you make smarter financial and investment decisions. And that's why I'm here. I got you. We're going to do this together. All right, so before I let you go, if you are someone who is looking to take control of their finances and start investing confidently into the marketplace, then I want you to attend my free live Wealthy Woman webinar where it's going to be me and you. I will be there. It's not going to be a recording, okay? Because I like to interact with people. So seating is limited, but click the link below and get registered for this webinar. All right. This session will cover all the essentials for building wealth and making smart financial decisions. And again, those spaces are limited. So be sure to click the link below and get registered. And yeah, thanks for tuning in. Don't forget to like, comment, and subscribe. Let me know if you're enjoying this market recap and forecast. Is this more of what you want to see? I listened to the surveys. Okay. I read every survey. So the content that I'm curating is based off of what you guys said you were looking for, and I'm so happy to do it. My name is the Bougie Banker, plumbing for anything, budgeting, saving, and investing. Bye.